Welcome to Target Market Insights, the multifamily and marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Welcome to Target Market Insights, the multifamily and marketing show. I'm your host, John Kasman, and I want to thank you for joining us for another great episode. Now, if you're enjoying the show, do me one quick favor and leave us that 5-star rating and review. And if you haven't already, make sure you hit the subscribe button so you don't miss an episode. Now, today we're going to be talking to Tim Hubbard. Tim started his career in real estate as an investment broker selling multifamily and commercial properties in Northern California. Now he is the founder and acts as the CEO for Midtown Stays, a short-term rental accommodation company which has successfully accommodated over 15,000 guests with excellent reviews from all over the world. Now, he operates this business remotely from his home in Medellin, Colombia, and he also teaches others to do the same. Let's welcome to the show, Tim Hubbard.
Thanks for having me, John. Happy to be here.
Absolutely, Tim. It is a great day. I can see, your beautiful background there for those of us watching on video. For those listening to us, Tim, you're out in Colombia right now, Medellin, Colombia, and you run your business remotely. I went over your bio at a high level, and I definitely jumped over some massive gaps. Why don't you take a minute or two and give us just a little bit more context on your background?
Sure. Yeah. Well, I started investing in real estate about 10 years ago, mainly small multifamily properties, traditional long-term rentals. I've always really enjoyed traveling. And so throughout the years, I stayed in a lot of short-term rentals all over the world. And I still do. And I my evolution in real estate, I started with a fourplex. I ended up working as a commercial broker, and we did really big transactions, apartment complexes and shopping centers. And then I started converting some of my own rentals into short-term rentals about 5 years ago, and realized that some properties can earn way greater returns as a short-term rental. And I've really been focusing on that for the last 5 years. So I've got short-term rentals in 3 cities and set up a lot of good systems to manage them remotely. So yeah, I've been living in Colombia down here for the last couple of years, and I've got some teams in the States that help me manage everything. So,
man, that's awesome. Listen, there's a phrase, living the dream. And I don't know if there's anything else that embodies it like your story, right? I mean, to move to Colombia, run your business remotely, be able to travel the world. I mean, that is the dream for a lot of listeners, right? A lot of people want to be able to travel the world, make money while they're doing it, and be wherever they want to be and kind of get this passive income. So we're going to dive into that a little bit. I want to start with kind of the business, right? And just to start high level, when we talk short-term rental, you said 5 years ago you made the decision to start converting some of your properties from long-term rentals, your traditional, 12-month leases, to short-term rental. I want to know why you decided to make that decision, and help us understand, how short-term rentals stack up in regards to long-term properties.
Yeah, so I started investing in California, and the market fundamentals there changed a bit, I guess you could say. So I was looking for places across the U.S. that had better returns, and I went to several cities and met with lots of property managers, and I was looking for turnkey properties, actually, just kind of basic single family homes. I wanted to buy, some of those and just kind of sit back and not do too much. And while I was looking for them, I was staying in short-term rentals, and I'd already started converting a couple of my rentals before that trip in California. And the properties I was staying in, I was paying almost the same amount that I charged in California. And then I remember looking up one of the properties I stayed in, and I'm like, oh my gosh, this property costs like a fraction of what my California property costs, and it's earning almost as much. So then the light bulb kind of went off, and I'm like, wait a minute, there's these properties all across the US that are earning really high nightly rates and staying occupied that don't cost a whole lot to acquire. So then I just started looking for properties that kind of fit that mold. but actually all the properties I've acquired were long-term rentals before I converted them to short-term rentals. So I always use that as a backup plan. I know that they're working well as a long-term rental. And then that also helped me to get financing on the properties because the lenders already see a cash flowing property. So that's kind of been my model, I guess, for the last few years. And I've done it in a couple other cities now.
So just traveling around the country, recognizing that, hey, the same numbers I'm paying here for this short term are comparable to what I'm getting in California, except these properties cost way less. So obviously the light bulb went off. There's a way greater profit margin by doing these short-term rentals across the country versus the long-term rentals you were doing out in California. So, I mean, especially for our coastal investors, right? If you're in New York or, California, in these high cost markets, this is something you should be thinking about, maybe making that transition. You mentioned that there are some things that you try to replicate, as far as, hey, why don't we just take this and run the same play across the country? What actually makes a good short-term rental? What's your criteria when you're looking for a short-term rental opportunity?
Yeah, good question. I mean, and there's several things, but I would say most of them, well, first of all, I like to have a good property that just makes sense as a traditional rental investment to begin with. So that kind of limits us in the markets across the US, right? One that's got high population growth, good diverse employment, that's regulation friendly. And I tend to find that, because that's a whole different thing that we have to consider with short-term rentals that we don't with long-term rentals is it approved in the city and do they allow it? And I found that a lot of the cities we want to invest in anyways that are landlord friendly tend to be more friendly towards short-term rental regulations too. So that's definitely something different that you want to consider, but it's easy to find out these days. I mean, you can literally just Google it and find regulations if they have them. And then, I've tend to cater to like a business traveler, which I know COVID's had a big hit on that. Luckily, we've stayed really well occupied. And there's some things we can dig into that. I think there's a ton of opportunity actually coming up because it wasn't just short-term rentals that lost business travel, but it was also hotels, and they lost it in a much worse and heavy way. And unfortunately, a lot of them aren't making it. So, but I like to have a blend, of a business traveler. Now that could be someone working from home where, people are virtual and they can stay places longer, but also some tourism. And those places for me have tended to be kind of like in a midtown area between the suburbs and downtown. So not super dense areas, but not far out in the suburbs. So somewhere that's close to restaurants and stuff like that. And I know this year, I mean, you're probably thinking, oh my gosh, COVID, no one can do anything this year. So I'm happy to dig into that because it's been much, much better than I would have imagined when things started happening in March. And I'm almost more excited for the future than I was.
All right. Well, listen, we are absolutely going to dig deep into that because that's one of the biggest burning questions that I have, and I'm sure our listeners have as well. Before I ask that question, though, you talked about, really focusing in on more of that business traveler, making sure that it's a regulatory friendly environment as far as the city, the MSA is concerned, that it has a lot of the same characteristics we like in multifamily. Growing population, something that's going to spur growth, development, driving people to come visit. And you like to focus on that business traveler looking more in that midtown area as opposed to going all the way out to the suburbs or being right in the heart of downtown. And I think playing in that middle space, you probably have some flexibility with being able to attract a little bit of a wider demographic. One question I have is like, can you do this anywhere? I mean, it sounds great if you're on the West Coast for sure, but, I'm out here in Cincinnati, Ohio, not exactly the travel hotbed of America. But as you look at Midwest cities, North Dakota, East Coast, down South, is this something that can be replicated in most cities, or do you really need to focus on those really big popular MSAs?
I mean, I like to focus on a MSA that's maybe got like 500,000 or more people, but not necessarily because of the short-term rentals, just because I think that makes a better market to invest in general. It's a little more stable. But no, I really do think, I mean, you Google short-term rental and you're going to find them like anywhere and everywhere all over the world. I mean, just the way we live and the way we travel has changed. And people love staying in short-term rentals, especially, now they can have a kitchen if it's a sort of a longer stay because they're working virtually and they don't have to show up to an office on Monday. Then a short-term rental space is a lot more accommodating now than it is for like a typical hotel. So, and actually during COVID with a lot of the big hotels that had shared spaces and elevators and are a little more confined, short-term rentals can offer private access and they have more space. So a lot of people that maybe wanted to stay in hotels that couldn't are exploring short-term rentals for the first time. And I think it's showing in the numbers, for daily rates and stuff. So I think you can do it in pretty much anywhere, but some places are going to be better than others. And there's some cool tools now available to kind of narrow that down pretty easily that do statistical data on short-term rentals. So you can see, how many rentals are in a city or a neighborhood even, and you can really dig into that.
Is there like one or two tools that you could recommend?
Yeah, absolutely. I use AirDNA. .co, I think that they're like the biggest name in the game. And I mean, they do reports for CBRE and a lot of different companies. So they're a big one. And then there's a few other ones. I mean, most of the short-term rentals are publicly available online. So there's quite a few companies that have popped up that scrape the data, if you've heard that term, so they can pull statistics. And there's more and more popping up, but AirDNA would be my go-to.
No, it's excellent. Thank you for sharing that. And it sounds like this could be, you could replicate this strategy in most cities. You like to focus on those bigger cities where there's at least a 500,000 population in the MSA, just because it works with your overarching plan, right? Make sure that it's a solid rental period. And then on top of that, yes, we're going to explore the short term. All right, we've been teasing the COVID conversation, so let's just dive into this, man. I got to tell you before I let you go that I know a few folks who were invested heavily in short-term rentals, and some are even doing, Airbnb arbitrage, where they would get a lease from a current landlord. Maybe they leased an apartment for $1,000. They would list it on Airbnb and make, $2,500 a month. They'd pay the landlord and then pocket the $1,500. Most of the people I know who are doing that the moment COVID hit, they shut their doors and they, lawyered up because they had no clue how they were going to pay the rest of their leases. Yeah. What have you seen? I mean, you're all over the country, but what have you seen? What has the COVID impact really been, at least for your business? And then I'm curious, just industry wide.
Yeah, no, you're right. I mean, the lease arbitrage operators, especially in the dense urban areas, I mean, they got crushed just like hotels. Anyone really in a really dense urban area, I think's had a hard time. And some cities have been far more regulated than others. I was kind of shocked. My properties in California, they're in Sacramento, which isn't as dense as, like a San Francisco or Los Angeles, but they are downtown and they were booked the whole time. I mean, it blew my mind. I did lower rates. I think that was something that everyone kind of did. It's lowered rates just because we do have less demand coming in. I mean, we don't have international travelers or anything like that. But I would say the ones that were hit the hardest, definitely in the dense urban areas, and the lease arbitrage operators, because if you think about it, they're leasing it from an owner or an investor who has to make their profit as well. So they're paying more than what an owner would. And there was only so many months. There's big companies that went out of business. Stay Alfred. I mean, some of these companies have thousands of units under this lease arbitrage model that are gone. So it's done two things. I think it's maybe raised people's awareness of operating under that model, but it's also decreased the supply in the market. So, I know in Memphis, where I have most of my properties, a lot of the lease arbitrage, they're just out of business. And so there's less supply there. So I think just one of the overarching themes of the travel industry this year is that if you're in a dense urban area, things are really hard, unfortunately. And a lot of companies aren't making it, including hotels, in Times Square and really big hotels that have been around forever aren't making it. And those travelers, when things do open up, are going to want to stay in places. So we've seen our average daily rates actually go up versus a year ago. Even now with no international travelers, it's crazy.
Yeah, Tim. I mean, you mentioned that the more dense areas have struggled more than the less dense areas. I just want to make sure we peel that back a little bit, right? Because I think that if you're thinking about this, you would imagine that more and more people are going to be going to New York, to LA, to Chicago, to Miami, than say Memphis, Sacramento, Cincinnati, something like that. So even with the travel restrictions, the natural logic may be, hey, you may have to lower prices a little bit because maybe there's less travelers, less international travel, but there's still a pretty big pool of people who are coming. And it seems like that really wasn't the case. Is that, what do you think is driving that?
The people going into dense areas, you mean?
Well, just simply looking at the density and why the lower density markets have performed a little bit better than the higher density markets.
Well, I think if you just look from a numbers standpoint, those properties in dense urban areas usually are much harder to find a return if you even can. I mean, the Los Angeles, the New York, the Seattle, Washington, D.C.s, those places traditionally I've never looked for investments there because the numbers just don't make sense. You have $1 million property that's maybe renting for $3,500 or $4,500 even on a long-term basis. Maybe it's getting $5,000 or $6,000 on a short-term rental basis. Still isn't going to perform nearly as well as a property that costs, $250,000 and it's making $3,500 a month. So yeah, the numbers, and actually those dense urban areas have tended to be the most regulated too, because they have, they don't have enough housing supply. And so the hotels there in the past, historically, have done really well because they stay more occupied. So yeah, those places, the dense ones, I mean, I found the restrictions are much more tough and the returns just don't make sense from what I've been doing. So
no, that makes a lot of sense. I mean, yeah, thinking about, the profit margins slimmer going into it. Most of these people are probably banking on appreciation over time as a big part of their model, as opposed to simply the cash flow you're getting from the rentals. You mentioned regulations. And my guess too is that for some of these smaller, less dense markets, people who are traveling really need to be there. This is less about, hey, I just want to go to New York, or I just want to go to LA. I mean, if you're going to Oklahoma City, I'm just picking on a market, it's probably because you need to be there, right? If you're a business traveler, you got family there, whatever the case may be. So you still need accommodations, and maybe if you were going to Chicago, you just decided not to make that trip. But if you needed to go to Boise or some other market, you still needed to go, and maybe you feel more comfortable in an Airbnb or a short-term rental than staying at a hotel with a bunch of other people. So obviously a lot of different factors at play here, but it's really interesting to note that some of these short-term rentals are actually performing better in the less dense markets than in the higher density markets, where I think a lot of that regulation is coming into effect.
Mm-hmm. Yeah, this year's been unlike no other. I mean, we haven't seen a year like this for the travel industry in our lifetimes. So it's been a really good test too. When things first started happening, I didn't know what to think. I was kind of planning for the worst. I always have the backup strategies. I'll just put long-term tenants back in if things don't pick up. But it really was like March and then a couple weeks in April where some of my properties were pretty vacant. They were the newer properties that didn't really have reviews. And I think what happened is Airbnb and the booking platforms just pushed them down in the search rankings because there was less people searching for them. But then my properties that had a lot of reviews stayed booked the whole time. I mean, it really blew my mind. But it's exciting to think that we're still operating really well in a time with so much less demand and no international travelers. So when that does come back, and travel opens, it should be even better. But it's been a really interesting year for sure, to say the least.
Yeah. Yeah, Tim, I'm taking away a couple of key lessons from everything you've said. First and foremost, if you're looking to get into short-term rentals, you still want to buy quality properties that work as long-term rentals. So buy right, buy in the same quality neighborhoods and markets that you would want for a longer-term property. First and foremost. The second thing is making sure that you are really appealing to that user. For you as the business traveler, making sure that the location fits for that individual and making sure that you really cater towards that demographic. And then the third thing is really just focusing on how do you insulate yourself from the unknowns, right? So if there's
Mhm.
regulations, if there's travel restrictions, things like that, making sure you have a good cash flowing asset that you'd still want to be invested in no matter what happens. You started to talk a little about kind of the hotel industry and tourism in general, and as you think about hotels versus short-term rentals, clearly that's a big sticking point for the travel industry. A lot of the hotel lobbyists have been pushing to make sure that the short-term rentals don't eat too much into their business. Maybe they're changing
Mhm.
having to change a heart right now, I don't know. But you said you're optimistic about the future. I'm curious to know why you're optimistic and what do you see as kind of the near-term future for short-term rentals?
Yeah, I mean, I'm optimistic for a few reasons. I mean, before COVID and everything, I mean, short-term rentals were growing exponentially. I mean, and it's mainly because when someone stays in one, they find that, gosh, this suits my travel style more, or it's just more accommodating, it's easier, and you can go with a family, or you're in a local place. So people are really discovering short-term rentals, and hotels recognize this. I mean, if you look at new hotels are being built, they're being built differently than they were 10, 15 years ago. They're being built, a lot of them you see like boutiques style hotels popping up that have kitchens in them, that are like design hotels that each unit's different. So I think people are like the flexibility with short term rentals, and the ability. It's a little bit more of an experience than just a typical hotel. And I think people are more mobile than they ever were. Not at this specific point in time because of restrictions, but uh, coming up to this, people have been more mobile than ever. I mean, we can go to a country where we don't speak the language and get in an Uber and go stay in a neighborhood in a place that we've never seen before. And we can do that all in a couple minutes by booking it online, and be comfortable with it by being able to read reviews. And so I think it's just a societal shift. I think people are changing the way they travel, and I don't see that stopping. And I know hotels have seen that too, because they're changing the way that they build.
Yeah, I mean, listen, I
So,
think that it'll be very interesting to watch how hotels continue to react, what happens from a regulation standpoint as we move forward. But it looks like there's still a bright future. So everyone who ran away from short-term rentals over the last 6 to 12 months, you know, take another look, especially depending on where your market is, and figure out what the
mhm,
demand truly is. And maybe it's something you should be considering. For folks who want to learn
mhm,
more about, Tim and some of the tips that you have, you got a podcast, Short Term Rental Riches. And I know that's
mhm.
available anywhere people listen to podcasts. So you should certainly check that out if you want to learn more about Tim and his strategies for short term rentals and how to really build your portfolio leveraging this unique technique. Tim, before we go, I want to talk to you about a couple other things. So we've mentioned that you are in Colombia. I got to know,
Yeah.
how do you run your business from a whole other country?
I use a lot of tools, and I have a good team, and that's another fun, exciting thing about this industry is that as it develops and matures, we have so many more tools available to us now in terms of property management and guest communications and home automation tools like smart locks and smart thermostats and smart lighting, and all those things. So I use a combination of all those things. And then I have basically the only on the ground people that we have are housekeepers and maintenance. And so they're super, super important, but I can automate all that with the software. So, they get their housekeeping schedules automatically, guests get their messages automatically. And it's basically just systems and automation. And yeah, it's crazy. I mean, I think, we've accommodated over 15,000 guests now, and I have rentals in 3 cities, and, we get great reviews, and it's just systems, I guess, like any business,
Yeah, you're in Sacramento, Memphis, and what other city?
Oklahoma City, actually.
In Oklahoma City, there you go. See,
yeah,
Oklahoma City, there you go.
Yeah.
So, you mentioned the systems, and I think for people who are interested in this, the hiccup for them is like, especially if they're doing it out of market, it's the boots on the ground, right? That's always the issue for out of market investing, is the boots on the ground, especially with something that's so high touch, like short-term rentals, where you may have a different guest, a couple of times a week. So you mentioned that really the maintenance and the housekeeping are the only 2 folks that are boots on the ground that physically need to be there. How do you go about vetting those vendors? I mean, are you working through a third-party company, or are you hiring these individuals directly?
I've tried it all different ways, and I actually use it. I have different systems in the different cities. Memphis is where I have most of my properties, so I've hired my own team there. But then, like in Oklahoma City, for example, that was my most recent acquisition, and I have less rentals there, so I hired a professional housekeeper. And the cool thing is, like, as travelers are becoming more aware of short-term rentals, so are management companies, and so are housekeeping companies. And so if you go into a new market and you Google, housekeeping for Airbnb, especially if you're in a city, that's sizable, an MSA that's got hundreds of thousands of people are going to pop up, and you're going to have plenty of options. So for me, it really comes down to how many properties you want managed, or you're looking to manage. The fewer you have, the easier it is just to find a professional housekeeping company, because you're not going to have the amount of work necessary to hire someone maybe on a full-time basis. But the more properties you get, you get economies of scale, and then you can really start to shave down some of those costs. Another good way is just to find a co-host. A co-host is someone that helps manage someone else's Airbnb, so specifically Airbnb. But they already have everything set up, right? So they have their housekeepers and they have their maintenance, and they're probably looking for more work. And you can find them easily on Airbnb. So that's an easy entryway to get into it. So there's several options depending on how much you're trying to do.
No, that's awesome. Thank you for clarifying kind of the way you approach it, and maybe where you start. If you're new, just go ahead and work with some existing housekeeping companies, or partnering with other folks who are co-hosts and already on the platform. And then obviously, as you scale, you can take on more of that for yourself and kind of run it where it's more vertically integrated. Tim, before we go on to our Bullseye Round, I have to ask you about REST methods. I know that you are working with other investors and teaching them how to, do short-term rentals. Talk to us a little bit more about kind of that platform and kind of where things are today.
Yeah, definitely. It's been a lot of fun. REST Methods is real estate short term, and the methods that I've used to manage thousands of guests as passively as possible. I mean, I'm out of the country, so I've got some pretty good systems in place. And so the podcast, that was really a way to answer questions that people were asking all the time. How do you do this, and how do you do this remotely? And so came out with the podcast, and then REST Methods afterwards. Really, we did a couple live events where I jam packed everything I could into a weekend. I did them live last year. We had two events. It was awesome. This year, I just did a virtual one, going with the times. But the cool thing with virtual is I was able to record it. So it's on my website too, at restmethods.com. And it's basically everything I can pack into 2 days to find these properties, to find the right ones, to set them up, to find your team, to set up your operations, and kind of from A to Z.
No, I love it. I love it. So listen, if you want to learn more about that, you can go to restmethods.com and learn more about, exactly what Tim has done to not just find these properties for short-term rentals, but kind of set up his system where he can be coming to us live from Medellin, Colombia. All right, Tim, we're going to go to our Bullseye Round. You ready?
Cool. Yeah, let's do it.
Give me a failure or an apparent failure that set you up for later success.
I would say not budgeting enough for renovations. And that's, starting out early on, and a lot of the properties I own are historic properties. Some of them are like over 100 years old. Especially if you're getting into old property, definitely be conservative with your renovation budgets, because it gets stressful when you start running out of money. So that would be my biggest thing. Definitely make sure you're budgeting enough. And if you're doing a short-term rental, I've seen this happen too. Don't expect your higher short-term rents coming in to pay for other units. I would have that money up front too. So,
give me a digital or mobile resource you recommend for your business.
Okay. This is a good one. And I just discovered this one a couple of months ago. It's just game changing. It's a database software note organization tool called Notion.so. And I've really been putting all my company operating procedures into it, and my training, literally everything. It really allows you to organize things really, really well, so that they're visually pleasing to someone. So Notion.so, that's been a good one recently.
Give me the book you've recommended or gifted the most in the last year.
I could go with Rich Dad, Poor Dad, because that's like the universal real estate book. But I'm going to go with a different one. The Slight Edge is really, really good one that's changed my life. And I continue to read it. And that's a really good one. The Slight Edge.
Give me a daily habit that helps you stay focused on your goals.
I would say a daily habit that helps me stay focused, or attributes to me being focused, is leaving my phone on airplane mode when I wake up in the morning, and giving myself at least an hour and a half or 2 hours to review goals and read and do the things that I'm trying to build towards, but by not being distracted with my phone.
What's one thing you know now that you wish you knew when you were starting out?
There's a lot of those. I would say, I guess with short-term rentals, if we bring it back to that, is that I found the returns for me have been much higher on small studio apartments than they have been on larger units. And they're also much easier to manage the guests because we don't have parties and stuff like that. So, short-term rentals can work at any size, big vacation rentals down to the small studio. But for me, that's something, I guess, I'm not doing larger rentals anymore for that.
What are you curious about right now?
I gotta say, I'm curious about the economy in the U.S. And all the trillions of dollars that we've just put into it, and how that's going to play out. One of the reasons I moved down to Colombia, aside from just loving it, I love it down here, but was also diversification. It's a different currency, it's a different market. So I'm actually looking at other markets right now outside the U.S. just for a little diversification, because I don't know. I'm curious what's going to happen with the U.S. Hopefully everything's good, but it's been a wild year.
All right. So you mentioned moving. I got to ask you, what's the best place to grab a bite in Colombia?
That's a good question too, to grab a bite. Their meats are really good. They don't have like these giant farms with corn-fed. There's just rolling green hills out here, and everything's much more organic and stuff like that. So you can get some great steaks down here. But I'd say one of my favorite restaurants, if someone's coming down to Medellin, Colasal is a really cool restaurant, and it overlooks like the whole city. So it's a great view and great food and a good atmosphere.
You said Colasal?
Colasal, it's called, yeah.
All right, we'll have to check that out. Hopefully get a chance to get down there. We'll definitely put that one on the list. Listen, Tim, you've given us a lot of great information about short-term rentals, how you got started, made your transition, things that you look for, and really just things that we can implement if you're looking to get started. I think the biggest takeaway is that, don't just assume that short-term rentals are dead. There's still a thriving industry, and there's a lot of opportunity, especially as we come out of COVID. So keep your eye on this. For folks who want to learn more or stay in touch or learn more about what you're doing, what is the best way for them to reach out?
Yeah, you can check out the podcast, Short-Term Rental Riches. It's on all the platforms, or my website, restmethods.com. And we've got a contact form on there and some free resources. Also with an ebook that I made that you can get for free, and talks about finding the best properties. And a lot of these, that are making like 3, 4, 5 or more times what the long-term rents are. So there is some really good opportunity out there. Yeah.
Good. Tim, definitely we'll make sure we check that out and link to that in the show notes. Thank you for coming on the show today. It's been a pleasure talking to you. Hope to see you and talk to you again soon.
Thanks for having me, John.